You need to be able to get in quick and get out quicker. Understanding the market. Trading volume. Volume is the amount of trades that occur in a single day or the average per day. Trading volume is important because we have a lot of trades happening at any single moment in time. That way, if we decide to sell at that market price, there is no question whether there will be a buyer or not. This is attached to the concept of liquidity, or how fast you can turn an asset into cash. If a stock has very high volume, it has a high liquidity because you're able to sell it very quickly to a willing buyer. On the converse, if a stock has a low volume, it has less liquidity because it's harder to sell. This is also related to market cap, the concept discussed in the last video. In general, nano cap through small cap stocks tend to have lower volume and therefore less liquidity. Just another reason to approach them with caution. Liquidity also depends on your account size. If you're selling one share of a company, a lower volume is okay. However, if you're trying to sell 100,000 shares, you need 100,000 willing buyers, and thus a higher volume is needed. So how much volume should you look for? Be wary when trading any stock with less than 1 million in daily volume. Generally, you want to stick to stocks with 10 million or more daily trades. If you are trading a very large account, stick with 50 million plus. That's all for trading volume, which is just another figure to look at during your analysis. Make sure to like and sub for daily videos, and see you next time.